Well, welcome, traders. Thank you for joining me. As many of you are familiar with my weekly wrap-up sessions, which I do every weekend, we're going to switch things up a little bit here today. We are going to spend most of our time kind of looking forward to what we can expect this coming week and what you do to prepare for the week, for your day as you're sitting in front of your computer. And I'm going to share with you how I do prepare on a couple of my favorite futures things that I do trade on. So right in front of you here, this is gold. I like gold. I like to trade gold. Gold is oftentimes thought of as the safe haven, particularly as such a global commodity that it is. It is very reflective of some of the not the chaos really, but the uncertainty that's happening globally as far as the Middle East conflict, the Ukrainian conflict. There's so many things that are put into play here for gold to be considered that safe haven. And it has been on an uptrend for some period of time, as you know. Gold used to be in contrast correlation to the dollar. Well, that's not the case any longer, or at least it hasn't been for quite some time now. So the dollar had been on an increase over these last few weeks, had a little decrease this last week, but over the last few weeks it has been an increase as well as gold has. So we'll see if that continues. Now in front of you, you have a one day chart. This is a daily chart on gold. Gold hit an all-time high again this last week at 2,772.60. I never thought that gold would make it that high, but again, that's certainly not up to me. But it is something that I will be watching for in the coming days ahead. On the chart here, we have a Fibonacci retracement, which I often put on the swing low to the swing high. I'll be watching the 0.50 retracement level, but then we have the golden ratio, which is called at the 0.618 percentage level. So we'll see if it does come back and test any of those levels. Now gold can move 50 points in a day. That's not unheard of. So it can certainly come back very, very quickly, or it can go up. So we'll just follow the price action and see what happens. But right below that, or right around that golden ratio 0.618 level, we do have some hesitation here. And we had a rally, and that's the basing, and then we had a strong rally up over these last few days. So we'll see if that can test that, or if it'll just bypass it and continue. We also have a trend line, a very strong trend line below, that which will certainly come into play again if it does retrace to those levels. So we'll be watching that. We have a strong above the 50 EMA on our daily chart, which I like the 50 on the daily. So let's drill down now on our gold and take a look at our 1 hour chart over here, and then a 15-minute chart. I'm sure many of you trade on a 5-minute chart or a 15-minute chart or the 1 hour chart. Well, let me tell you, probably the strong or the large hedge funds, they don't trade on a 5-minute chart. It's mostly us retail traders, so we have to kind of follow their lead, right? We don't have any control of the price action. If they decide to turn lower, we're going to go short. If they decide to have that trend up, we're going to follow their lead, like I said. So just keeping that in mind, and that's why you always want to keep your eye on the longer time frames, the daily chart or even the monthly chart, to really get some good ideas as where those trends could reverse. Now on the 1 hour chart on gold, I have another couple of trend lines here below and above. And it is possibly going to create that wedge pattern. So we'll see if we just continue that trading within this range of the wedge, or if we'll have a breakout above or below. That's something you also need to consider when you're preparing. How will you handle that? Will you follow the lead and just go above or below, or are you going to are you going to make your own decision on what way you think the market is going to be? So consider that. Now on gold, on a 1 hour, we do have a strong resistance level right here, which has not been yet retested. So when we follow that over to our 15-minute chart here, those are the horizontal lines here I have above it. Those correlate over here to the 1 hour chart on this resistance. So we'll see if it does test that coming into this following week. And my 15-minute chart. Of course, I have a 20 EMA on the 15-minute chart and the hourly chart. So we'll see if that holds. But we have that strong trend up, and it might come back and just retouch the EMA. So we'll see if that does happen. Now, you know that on all my charts, I always have the RSI. I do play with the stochastics and the MACD as well, but primarily I use the RSI. And when I'm looking at the 1 hour and the 15-minute charts, I like to have those in correlation. If I have a strong RSI on the 1 hour chart, I like to see that carry over to the 15-minute chart. It just gives me another odds enhancer, so to speak, of which way that's going to move. So now we're going to move over to the S&P. My other favorite to trade. This also has strong wedge pattern. Look at the wedge that has been created here on these trend lines. We had strong touches on the trend line. Again, it is above the 50 on the daily. This is the daily chart. Like I said, we had some resistance here on Friday. A lot of indecision with a lot of volatility on Friday, and it ended up certainly going down for the day. This was the first weekly decrease we saw in the S&P since the end of September. So it's, who knows what's going to happen. We had a weak RSI on the daily. Now let's drill down the S&P to the 1 hour chart over here on the S&P, and then we have our 15-minute chart. Let me just get rid of that. Now on the hourly chart, we have the trend line here. It's just had 2 touches, so we'll see if the Friday's move to the downside, it continues down, touches that trend line. Will it keep going? We'll see. We have an EMA on the hourly chart here that is well below it right now, and that happened on Friday. And our RSI is very weak on both of our hourly chart and the 15-minute chart. On the 15-minute chart over here, I have my horizontal lines. Those correlate to this indecision candle here, this bearish candle right here on our hourly chart. That area on the 15-minute chart has not been retested. So we'll see if that can continue up to the upside, do a touch and come back down and hit this trend line. So there's so many things that you can look at in your preparation as to how are you going to play it. And that's what you should have written in your game plan, your checklist. Which indicators work for you. Some of them will work on one market you trade and not on another one. So like I said, they all always have their own personalities that you need to be aware of, and they will reflect that in your indicators, in the patterns that are created as you trade, and you can watch them. And then you'll see the same patterns, whether it be on a 5-minute chart or your 15-minute chart, your daily chart. You always have the same patterns. You can use the trend lines, your EMA. So get familiar with those, and like I said, get your favorites as to which market you're trading and which ones will work to your benefit. I'm working on a series of YouTubes that will cover the different indicators, the RSI, the MACD, the stochastics. Play with them and see which ones, like I said, work for you, and you will find that you have ones that work and ones that don't, and you want to test those out. You want to back test those as well as how are you going to handle a breakout. Are you going to jump on? Are you going to wait for a retest? All of those should be in your checklist, and we'll be covering those as we go along. I also want to tell you that this week we have some economic indicators coming out. We have the CPE is coming out on Thursday on Halloween, and happy Halloween to you that do celebrate that. So we'll see if it is indeed a happy day, or if the goblins will come out. So, but yes, the PCE, and that's a once monthly indicator, so that will certainly have some impact. And then we have unemployment rate on Friday, as well as non-farm payroll. So it's going to be a busy week, but even that being said, earnings. We are in the depth of earnings season right now. The Magnificent Seven, and practically all of them, are coming out with their earnings. Most of them are expected to beat expectations. We have Meta, we have Google, we have Apple, we have Microsoft. So as you know, those have such a great impact on probably primarily the NASDAQ. And the NASDAQ hit its all-time high in the futures market this last week. So we'll see if those earnings will carry it even further above. and that will certainly impact the S&P as well as if you do options. Keep an eye on that. Do you play the earnings on the options? So a lot going on this next week, and then of course the next week or the following week we have the election. Now let's talk a little bit about that. Historically, the election, there's certainly a lot of volatility, obviously, in the days leading up to the election. So we'll see in historical, we've had a recovery, kind of, it's called a relief rally after the election results. So, but then they have to interpret what policies. What are the indications of their policy that will be put in place then, or expected to be put in place then when they take office in January? How will that impact the different sectors? So there's a lot going to be going on, obviously, with the election. So we'll see. Typically, we do have a rally after the elections, and in the last few, that has carried further. So we'll see. We'll just have to follow the price action and see what does happen there. So trade with traction, not distraction. I'd really appreciate your comments or questions that you might have that I can address as we move forward in our journey together. So thank you so much for joining me. Take good care.